What's up, everybody? TGIF, happy Friday. Thank God it's Friday. Whatever you want to say, I don't care if you're gay. Welcome back to Trades and Gains, the number one market recap podcast on the internet. And we break down the markets faster than Powell pivots. It's Friday, April 25th. And the markets just wrapped a monster week. The S&P just bagged its longest win streak since January, and big tech is doing the heavy lifting of that. So let's unpack the headlines, options flow, and what this rally really means heading into one of the most stacked earnings weeks of the year next week. So here's a quick market snapshot. We had the S&P 500 rise 0.74% on the day, and that is a 4.1% gain on the week. Let's go. We are so back, I think, maybe. Options flow might uncover different. The NASDAQ was up 1.26% today, which gave it a 6.3% weekly gain, and tech is in full beast mode, but then again, it is earnings season, so that is to be expected. The Dow, it's the redheaded stepchild that we all hate, only rose about 0.05%. Still had a decent week, but missed the train on the gains train, baby. It's been 4 straight days of green, though, for the major indices. And guess what? The Magnificent Seven all ended in the green as well, as we can see down here. And that was led by Tesla with a 9% rocket. And the catalyst behind this was the India entry buzz. They refunded the Model 3 deposits in India. The U.S. eases self-driving regulations, and Tesla's up 18% in 5 sessions now, with global expansion narrative reigniting the bullish sentiment, and self-driving legislation shows U.S. wants to stay ahead of China in EV innovation. We also had Google, who surged after those killer Q1 earnings we covered yesterday. We had also Nvidia, Netflix, and Amazon. Nvidia up 4%, 9% on the week. AI demand refuses to slow down. It's like that ass won't quit. You know what I mean? Next up, we have Trump keeping the tariffs tension alive. Markets were cheering reports that China may ease its 125% retaliatory tariff, but Trump poured cold water by saying, "We're not dropping tariffs unless we get something back." While it cooled intraday momentum, the overall tone remained risk on, and traders shrugged off political ambiguity for now, at least. The Fed doves are circling again, by the way. Cleveland Fed President Beth Hammack hinted that a rate cut could happen in June if, and that's a big if, data shows clear signs of disinflations. That was enough for the markets to push yields down and boost tech by 10 times. Now let's go over and head over to Investor Central Club and see what the big money tickers were telling us. So to kick things off, let's go with our overall flow as we always do. And again, this is just for today. Now today we had SPY leading the pack with 98.62 million in flow, with 32 million in calls against 66 million in puts. Strange considering that that the market's ripping, but who knows? Let's look at what these prints are. It looks like the 540 puts that are due for next week were hitting hard, and it looks like people were having to average down on that rip. We have a 498 average, with the last print coming in at a 353 average as well. We had Nvidia ripping again. Tech is ripping. So we have 84 million in overall flow, with 70 million in calls against 14 million in puts. And our most common contract here are the Nvidia 125 calls that are due for June 20th. We also had Tesla with 64.85 million in total flow today. Looking at this, we had Tessie Wessie with 43 million in our calls going in, and we have 2 golden sweeps here for that May 2nd 280 print as well. We also had QQQ, which had 30 million in strong flow. And that had, again, that was like a very split down the middle type of divide. But when we look, we see the 425, the days, 0 days, 467s were some of our hottest contracts for today, folks. Now, some standout trades here. We had the June 105s coming in for Nvidia. Let's go ahead and take a look at our big money for the day as well. Now, our big money is going to show us where institutions are really starting to position themselves. So as we can see here, we have Nvidia with the 105 leading the day with 19.64 million thrown into that premium, and it doesn't expire until October 17th of 2025. Someone has some very long-term conviction with Nvidia, and that's a very interesting thing to see here. We also saw Microsoft with coming in second at 11.94 million. Granted, some of these contracts are insane, so these values may not be relevant to you, but at least gives you some directional bias. So what I would usually do is buy further out of the money, but I'm at least like heading in the same direction and in the same time frame as them, and then I'm just whale watching at that point to see when they're going to offload their position. So now let's go ahead and look at our dark pool data for the day today. So let's go ahead and switch off big money. By the way, stacks got lit up today. We had 1, 2, 3, 4, 5, 6, 7 call outs, 2 for Google. Those were some big ones that came in. 2.91 million on Google at the 325 average. We're currently tracking those $200 calls. Cores led everything though. $15 call, 0.36 average, with a $3 million premium attached to that bad boy. And Stacks has not been missing. We had a Tesla $44 million sweep that it called out, and that went from $22 to around $43 today. So when we're looking at our dark pool data now, let's go ahead and dive deep into this. Let's look at our total cost. And with our total cost, it looks like we have Microsoft that was leading the pack. We had $350.36 million deployed at the 390.40 spot for Microsoft. It looks like someone is still long-term bullish on tech. We also had INSM with $249 million put in at the $68 spot. And we had SPY with a nice $226.51 million dark pool trade at the 545.81 spot as well. So it looks like institutions are still quietly accumulating in the background without trying to disrupt the tape too much. Again, we're going to see some strong bullishness come out of tech, so keep an eye out for that. Across the board, the highest conviction flow is in the semiconductors and tech, though. You're not seeing this type of size without institutions betting on momentum and continuation, most importantly. Now, heading back, again, Google beat on earnings. We already went over that. Intel beat earnings, but lowered their guidance for Q2, and the stock is down 6%. The new CEO, Lip Bhutan, said cost cuts are coming fast, so that could be a bullish sign. Netflix closed at an all-time high. The company has dodged the tariff drag better than their peers, and analysts are calling it a defensive tech play. And Bitcoin also quietly hit 95,000, up 11% in 5 days, folks, as crypto sentiment bounces on pro-crypto chatter from the White House. Now, consumer sentiment tanked to its lowest since 2022, again 52.2, with inflation concerns plus rate fears still weighing in. We had mortgage rates sitting at 6.73% thanks to rising 10-year yields from the Treasury sell-offs. Gold, after hitting 3,385 earlier in the week, closed below 3,300 as safe haven demand starts to cool off. Now, what's next? We have big tech earnings bonanza. Wednesday, we have Microsoft and Meta, and on Thursday, we're going to have Apple and Amazon. We also have tariff negotiations. Will Trump hold firm or blink? More macro data. As well, we have durable goods, PCE inflation are also due out. So this rally has legs for now, but the sentiment is stretched. Tech is leading, but bearish flow is still showing up in SPY and IWM. Watch for the rejection at the S&P at the 5160 level and the NASDAQ at the 17,500 next week. I don't know if those levels are right. I don't think they are, but we're going to run with it anyway. Strategy tip: if you're long on tech, trail stops or consider hedging via puts into earnings. The next 5 trading days could be make or break. If you've made it this far, you're already ahead of 90% of traders out there. Subscribe, tap the bell, and stay locked into Trades and Gains. where we turn these into narratives that make you money. Drop a comment. Are you buying this rally? What's your biggest earnings play next week? Stay sharp, stay paid, and I'll see you all Sunday for our weekly outlook.